Welcome to Inevitable Wealth from Liberty One Wealth Advisors, a conversation around financial decision-making and events around the globe. In the age of instant information, level heads can be hard to find. Our hosts, Guilian DiLeonardo and Jacky Petit-Homme, provide objective and relevant insights to help you parse the data and block out the noise as you build your wealth. As managing partners of Liberty One Wealth Advisors, Guilian and Jacky look to empower you to develop an increased understanding of financial markets and how they impact you.
Hello, everyone. Welcome to Inevitable Wealth, the podcast where we explore financial strategies and insights you need to build your wealth. I'm Jacky Petit-Homme, and I am here with Guilian DiLeonardo. Guilian, how are you today?
Hello, everyone. How are you?
Cool. So today we have I'd say, an interesting episode. We'll be discussing a topic that I think most folks should be considering and playing around. The Tax Cuts and Jobs Act, or the TCJA, and its pending expiration at the end of 2025. And yes, we know we just started 2024, but there are some things that some folks might need time around planning because there are some, I would say, significant changes coming up if this does expire. So let's get into it. Guilian, for those who are listening that don't know what the Tax Cuts and Jobs Act is, can you give us a brief overview?
Absolutely. So I know it can be a little dry. We'll try and keep it interesting. So the Tax Cuts and Jobs Act was signed into law in 2018, introducing significant changes to corporate and individual taxes. While corporate changes are permanent, a lot of the individual provisions are set to expire after the 2025 tax year. So these are things we want to be proactive about, and at least folks should be aware, right, of what's going to change for them, so that if they need to make any changes, they can.
Exactly. So these expiring provisions, I say, they add complexity in tax planning, and especially with the elections on the horizon, the tax landscape remains pretty uncertain. So one of the key changes set to expire is the individual income tax rates. So Guilian, can you shed some light on what's happening with the tax rates?
Certainly. So individual tax rates are poised to revert to 2017 levels, along with income brackets also returning to what they were. Now, most people, I would imagine, have forgotten what that looked like, right? It was a couple of years back. Tax rates, for the most part, will be going up, right, for most of the marginal brackets here. So, for example, if you were a single individual making 100 to 200,000, that marginal bracket is going to go from 24% to 28%. So 4% more in that bracket you will be paying in federal income taxes.
Yep. So if you anticipate having lower income in the years leading up to 2026, maybe due to retirement plan contributions, there's an opportunity to take advantage of the current lower tax rates, right? So one example might be Roth conversions, right? So basically a Roth conversion involves converting pre-tax retirement funds like something from a traditional IRA to a Roth IRA, right? This means paying taxes on that converted amount. So if you move, let's say, $10,000 from an IRA to your Roth IRA, you will pay taxes on that $10,000, right? And the idea is to do this while the tax rates are lower than what you might expect in the future.
Exactly. And once the funds are in a Roth IRA, they do grow tax-free. So if you're evaluating doing it now versus in 2027, you're essentially getting a discount on your future tax bill just by being proactive and doing it now. It's a great opportunity for both those that are still working and those that are retired to continue to monitor this, keep an eye on exactly how their bracket is going to be affected and essentially what their new bracket's going to be, so that they can be proactive over the next 2 years, right? Because there's two different essentially tax years that you can split gains between. and really navigate around before things sunset at the end of 2025.
It's a great point. So that's the individual tax rates, right? So another, I'd say, vital change about this is for those considering their estates. So let's talk about estate planning, and those with sizable estates. What should they be considering before the 2025 sunset?
So estate planning is a crucial part of what we help the families we serve with. Essentially, the increased estate and gift tax exemption is also going to be cut in half, right? That's part of the bill that will sunset essentially at the end of 2025. So if you have a sizable estate, like a few of the families we serve, another large opportunity to take advantage of is accelerated gifting, enhanced estate planning, things that can essentially help you mitigate what we call the death tax in the future. And how that works is the current exemption is about $12 million, right? So it's a significant amount. A lot of folks essentially who qualify have had small businesses and liquidation events to essentially get to that point. But essentially, upon one's passing, you can leave behind $12 million with no estate tax implications federally. After 2026, that number is going to be cut in half to about $6 million. So while many families won't be affected by this, the death tax, when it comes into play, quickly climbs up to 40%. So the first $6 million excluded, and then beyond that, right, once it hits, I think it's like $385,000, you're taxed 40% over that. So that can be pretty significant for those who have a rapidly increasing stock, or apologies, rapidly growing stock gains, small businesses, things like that they can plan around. And it's a good time to take advantage of that, or at least speak to a professional so you know what you can be doing and what your situation looks like from that perspective. Anything to add there, Jacky? I know it's a little bit convoluted.
And we are trying to make this not as boring as possible, folks, but this is important stuff. But with the exemption amount cut in half, right, for each taxpayer, this change will not only affect estates already over the current exemption of 12.06 million to be exact, but also those in that $6 to $12 million range, because these estates will suddenly find themselves subject to that, that taxation for estates. But there is some good news. The IRS has issued regulations to prevent a clawback on those lifetime gifts, right, made during this period before the end of 2025. So if you are in that range of 6 to 12 million for your estate and you are accelerated gifting, you won't find yourself in any form of tax or legal trouble if the TCJA sunsets in 2024. Excuse me, at the end of 2025. But before we wrap up, it's worth noting that 2024, right, this year is an election year, and the outcome of the election will have, I would say, probably pretty significant influence over whether the TCJA ends or is re-upped. So, Julian, I know you have a pretty interesting take on this, and I was hoping you'd be okay with sharing that with the folks.
Absolutely. So this is a big part of the reason we elected to talk about it at the top of the year. Two components, right? Of course, plenty of time to plan. And then two, the next president, right, it is an election year. The next president and their party are going to play a pivotal role in determining what's next for the Tax Cuts and Jobs Act. Now, it is set to sunset, right? And essentially what it comes down to is whether they elect to extend it or modify it. So, of course, Republicans primarily passed this in 2018. The election is up for grabs right now, looking like Biden versus Trump, but who knows? And essentially, when it was passed, part of the reason they made it so individual tax rates were affected most is so most of us, right, would be more swayed to essentially vote for who's more likely to pass this, right? Because we're all affected by it more than perhaps corporations. Is there anything else to note, Jacky, on that and the upcoming year?
Yeah, I mean, I would like to just like list off a few other changes because I think a lot of folks are impacted by this potential sunset as well, whether they might are aware of it or not. Not only just individuals that might be in high income brackets or individuals that are, have large estates. So of course, this isn't an exhaustive list. If I had to mention everything that's changed, this episode would be, an hour long. But I think these are some that I think some folks should be aware of, just because it will affect, your taxes. So the first one is the standard deduction will lower almost by half. So this will basically increase the likelihood that itemizing your deductions would probably be a good way to move forward. Also, the $10,000 limitation on state and local taxes will be removed, right? So folks in high real estate tax areas, right? My friends out there in Jersey, right? That limit has been removed. Mortgage interest also will be deductible up to $1 million, up from $750,000. So, and also expands up to $100,000 in home equity debt. Miscellaneous itemized deductions, also very helpful for those with unreimbursed employee expenses. We have a lot of families we serve who unfortunately have to pay out of pocket for supplies, especially those teachers out there, right, who are paying for crayons and all this stuff for their classrooms, right? Those can finally be deducted as well. And then for our business owners, the QBI, right, qualified business income deduction, that 20% for pass-through entities will be eliminated. And also for our high net worth folks and high income, the AMT, alternative minimum tax, that exemption amount will be reduced. So again, like I said, not an exhaustive list, but definitely something you should be speaking with a professional about. It's also essential to stay informed about what your candidates' tax policies are and how they might impact your financial life. So yeah, the 2025 tax sunset is something we all need to be aware of and plan for, especially considering the upcoming election. Julian, anything to add?
You're actually exactly right. What we don't want folks to do is wake up and it's 2026 and they're paying more taxes and they didn't know that they could have essentially mitigated that, reduced that, and taken action ahead of time to limit what's going out of their pocket, right? So we are just looking to be proactive. Any questions, you're always welcome to reach out to us, tax professional, to help navigate around these things. Planning ahead and staying informed about the landscape is crucial for making sound financial decisions for you and your family.
Great. Well, thank you for sticking with us. We know taxes isn't the most fun topic, but it's going to impact everyone. So thank you all and have a great year. Yeah, we did it. It's January. Take care.
Liberty One Wealth Advisors is a registered investment advisory firm located in the state of Pennsylvania. Any options expressed are derived from sources generally believed to be reliable and are provided for informational purposes only. It does not constitute any form of advice or recommendation to buy or sell any securities, adopt any investment strategy discussed, or invest in any specific product. Nothing contained in this podcast constitutes investment, legal, tax, or other advice, and is not to be relied on in making an investment or other decision.